So if you're a long-term investor, you're probably not complaining about the market's performance so far this year. With history as a guide, Mike Santoli takes a look at what could happen in the months ahead.
Not quite halfway through 2017, the stock market has already returned nearly 10%, equal to the long-term average gain for a full year. But it would be a mistake to assume this means stocks are way ahead of themselves or due to stall for the next several months. It turns out the stock market only rarely produces an average return in a given calendar year. Since 1928, only 6 years saw the S&P 500 index gain between 5 and 10%, what we've come to think of as the long-term average yearly performance. The index has climbed more than 20% in a year, 4 times as often, in fact, and experienced outright declines 30 times in those 89 years. This is a good reminder that equity markets deliver their rewards in waves, not in metered doses. So if the market is unlikely to simply idle near this level for the next 6 months, where might it go based on current conditions and historical patterns? While no one can ever say with much certainty, the weight of the evidence tilts toward the upside. Beyond the ongoing recovery in corporate profits and solid global economic growth, the behavior of the market itself this year, a calm, persistent uptrend, most closely resembles past years that finished strong. Whenever the S&P has been up at least 7.5% in a year's first 100 days, as it was this year, stocks added to those gains through year-end 20 out of 23 times. And since 1950, if there have been at least 15 all-time highs through May, just like this year, the index added on average another gain of nearly 8% through December, which is significantly better than in the average year. One looming negative exception to these encouraging patterns is 1987. A scary year to come up in historical comparisons, given the crash that October. Yet it's important to note that stocks had soared a whopping 40% from January into August that year, a far more overheated market than the current one so far. None of these historical patterns make the market immune to shocks from a sharp growth slowdown, an aggressive series of Federal Reserve rate hikes, or a political crisis, but they do serve as comforting context for a stock market that has surprised many this year with its quiet, relentless strength. For Nightly Business Report, I'm Mike Santoli.